Bitcoin and Polygon are much higher for the week, with the most popular cryptocurrency seeing 4 straight weeks of gains after increasing nearly 14% last week.
We might get a more hawkish Fed. Does that mean that the consensus around 25 basis points is incorrect, or do you think it's more going to be a tonal shift, if you will, from the Fed?
The U.S. economy growing more than expected in the fourth quarter, even as fears of a recession loom. GDP rising 2.9% at the end of 2022. So how do you square some of that momentum that we certainly have seen in the market since the start of the year against that slowing growth picture that we are clearly starting to see play out in the economy?
I never saw so many people so bearish. And I think, as I mentioned, when everyone's on one side of the market's going to do the opposite thing.
Bitcoin holds steady above 23K. The Bitcoin price has rallied over 30% in 3 consecutive weeks for January. As Bitcoin and other cryptocurrencies continue to rally, is this just a big bull trap for investors desperate for price action? Is the Fed more likely to hold rates steady for the rest of the year than cut? And how will the Fed's next move affect Bitcoin prices? In today's video, we'll hear Mark Yusko discussing macroeconomic trends that are currently affecting the Bitcoin prices as a whole. Stay tuned until the end of this video to know more details regarding Bitcoin price movements, Fed's next move, and the macro picture. And if you haven't joined our little community yet, be sure to hit that subscribe button for more videos on crypto, the market, and the economy. Let's dive into it.
So on the macro side, I don't think we're out of the woods. Data's bad, right? Leading economic indicators have been tumbling. Lynn probably talked about that.
Yep.
And, you think about the future. We got bad demographic trends, right? We got a lot of people from our age cohort, the boomers, that are turning 65 to 85 and starting to retire. And that's negative for productivity. It's negative for working age population growth. GDP equals working age population growth plus GDP. Both of those are sub 1%. So other than, cheating like by selling oil in the SPR, it's going to be tough to get greater than 2% GDP. So it's going to feel not very good. You throw on top of that the Fed continuing to tighten. Everybody says, oh, they're pivoting. Well, they haven't pivoted yet. They slowed the pace of tightening from 75 to 50. And now people are saying, oh, it's going to be 25 this month. Maybe. We'll see. But even that is still hiking. That's not cutting. And so I think the macro is still a headwind, is that. Now, on crypto, I think we're in the middle of one of the great short squeezes of all time.
The Federal Reserve has been gradually tightening monetary policy lately, when it started raising hawkish rates since March 2022 for the first time in nearly a decade. The Fed has lifted rates 4 times since 2022, and now the debate is going on whether we'll have a dovish or a hawkish Fed in 2023. Well, the central bank needs to strike a balance between boosting the economy and keeping inflation in check. But with the Fed's benchmark rates still up more than 2%, Mark Yusko believes that the central bank has no room to cut rates right now. Maybe they'll do 25 basis points as everyone's expecting right now. But he did highlight that even that is still hiking, so not seeing rate hikes isn't an option. Bitcoin and other cryptocurrencies have been on a tear lately, with seeing new lows. But as prices continue to climb in January, some investors are wondering if this is just a big bull trap. Is the rally just a result of investor desperation for price action, or is there something more underlying this price surge? Only time will tell, but in the meantime, let's explore some of the reasons why prices could continue to go up or come crashing down. For more details, let's get into the next clip.
You got the fundamentals on one side, and then you have the monetary piece on the other side. And here's the thing. Bitcoin and gold, but because they're both one and the same, don't like quantitative tightening. They don't like money supply growth shrinking. So we actually have had, in recent months, the first time in 60 years, 60, money supply actually shrink.
Interesting.
So
okay.
If, and again, that's capital I, capital F, if the Fed follows, see, Japan already pivoted.
Right.
Japan unleashed a tidal wave. I mean, tidal wave of liquidity. And you look at the yen went from 153 to 128, like almost instantaneously. I mean, crazy. I mean, Kuroda-san is crazy. I mean, the dude is, otherworldly when it comes to printing money. So that was first. Second, China has increased their credit impulse, starting in kind of May, June of last year, and I think they're going to unlock from COVID zero, and I think they could stimulate $500 billion. I mean, a big number. So if the Fed follows, then that'll be good. Because the thing that people forget, one Bitcoin is one Bitcoin. We don't price it in Bitcoin. We price it in dollars. So the reason that Bitcoin goes up over time isn't because Bitcoin gets better. It's just a Bitcoin. It's because the dollar's getting worse. And so when we're quantitative tightening, the dollar got strong, which meant the price of Bitcoin went down. Now, as the dollar's getting weak, and the dollar's been in free fall, right, since October. I mean, absolute free fall. DXY just getting crucified.
Sure. Yeah.
And so if the Fed follows through, then I see a big tailwind for Bitcoin, gold, and all stores of value.
It's been a roaring start to 2023 for Bitcoin, which has surged in price more than 40% since New Year's Eve. BTC surpassed $23,000 for the first time since mid-2022, about a week ago, and it's managed to stay in that territory. It's pretty good news for Bitcoin and the crypto market, but still, people are afraid of the Fed's next move. The market pretty much thinks that the Fed has maybe 1 to 2 more rate hikes left, and then it'll be done. Inflation has dropped, but it remains above the Fed's 2% target for years to come, leaving a relatively slim chance of rate cuts anytime soon. Markets see a near certainty that the Fed is going to enact another 0.25 percentage point increase at its February meeting, and likely follow that up with one more similar-sized hike in March. Mark Yusko highlighted that if Fed follows pivoting, then that'll be good for Bitcoin prices in 2023 and the years ahead. The current levels in derivatives suggest that the market is optimistic, but at the same time not yet overheated, which could create grounds for the ongoing rally to persist. Let's get into the next clip to see why Mark Yusko believes that we're not out of the woods yet. But before jumping ahead, be sure to like and share.
I don't think we're on the precipice of some calamity either. I've said for probably the last year that this recession, and I actually believe we're in the recession, right? I think they'll call it retrospectively. They'll say it probably started, March, April last year, and we're probably closer to the end than we are to the beginning. But it's a shallow recession, very similar in my mind to the 2001 recession, right? 2001 didn't even really feel like a recession, other than the fact that things got exacerbated by the lockdowns following 9/11. If you go back to 2001, it was interesting in that we had the tech bubble starting to bust. First quarter GDP was negative. Second quarter GDP was marginally positive. Third quarter was negative, exacerbated by 9/11. And then fourth quarter was positive. The whole year, GDP was actually up 1%. We're still waiting on fourth quarter number. With the fourth quarter number, last year is probably going to be a positive number. But we still had 2 negative quarters, January, February. Third and fourth quarter weren't real. What I mean by that is most of the GDP was simply the resale of the oil from the SPR, which is just a bogus way to create GDP, but is what it is. It's like the broken window fallacy of hurricanes, right? Hurricane hits, they don't count the destruction against GDP, but they count the rebuilding for GDP. Doesn't make any sense.
A raft of data showed that the US economy fared better in the fourth quarter than analysts expected, and the labour market remains tight, despite some signs of weakening demand. This is a double-edged sword for investors, as it could embolden the Fed to keep key interest rates at restrictive levels for longer. While financial markets have largely priced in a 25 basis point rate from the central bank, that sentiment isn't unanimous. Despite the fairly strong economic data, most economists and experts think a recession is a strong possibility for this year. Mark Yusko believes that we're already in one. It might be a shallow one for now, but we're surely in a recession. But what do you guys think? How will the Fed's next move affect Bitcoin prices? Have we seen the Bitcoin bottom, or is the market way too optimistic? What's your 2023 outlook? Let me know your thoughts in the comments section below. For more videos like this one, be sure to subscribe to my channel. You can also hit that bell icon to never miss out on a single video. Adios, and thanks for watching.